Good morning. It is Thursday, August the 9th. Going to have a little bit of price action this morning around 8:30 with the initial jobless claims and the continuing jobless claims. But other than that, I don't think we're going to have a whole lot of action around 8:30. Overall, we're seeing the equities market pull back this morning, and looking at this US dollar index chart here, you can see the last more or less 12 hours we've seen the US dollar index start to climb, and of course that puts pressure on stocks and commodities. Looking at the chart here, just drawing some simple analysis, you can see we've got a lower end of the range, we've got an upper end of the range. Wouldn't be surprised if we see the US dollar continue to work its way higher today. Of course, it's going to run into key resistance pretty much right through this noise, this previous pivot low and congestion zone, and of course it'll run into the upper trend line. So I do feel as though it's relatively capped for now for the US dollar index for how high it'll go, although it can still double this morning's move from around the 82.30 area. So we could see it continue to double and work its way up to the 82.80 to possibly 83. And again, that would send stocks and commodities lower today and possibly start the downward momentum in equities. If we do see that hold up fairly strong, we might see a little bit of a pause consolidation, but overall, if the US dollar eventually breaks out of this little pattern, it might have a little pullback once it does, but overall it could be starting another big break to the upside, which would trigger a pretty strong sell-off in equities. Let's just take a look at energy commodities. Here's the crude oil chart. You can see here we're coming into more or less a little bit of a resistance zone. We had this key breakdown level was support. Eventually we broke down, and that's where we're coming up tagging this morning or the past couple trading sessions. If we just zoom into the recent price action, you can see price action starting to get a little toppy. We had a topping candle and we had another pop yesterday, and it got followed by some strong selling again, and we're just kind of starting to chop around up here. Overall, I do feel as though we're probably going to see crude oil pull back and come back down to the 92, possibly even 90 area. Looking at natural gas. Natural gas had a nice bounce off that support zone, which was just simply right through the middle of this previous consolidation where the average price of the contracts are held. Again, that's where you're going to find the key support level. We've had a nice bounce out of there. It's slowly fading back down. It looks a little bit like a bull flag. It may want to have another push up from here, but overall I do feel as though we're going to see natural gas pull down and run these stops here and push down a little bit lower to the 270, 260 area, at which point I think it could spur on a pretty strong rally. Looking at precious metals, here's the 4-hour chart of gold. You can see, if you remember the US dollar chart, the last 12 hours, the last 3 candles were up in the US dollar. Well, now we've got the last 3 candles in precious metals are down. Obviously, they do pretty much the inverse relationship. And if we do see the US dollar continue to head up, then we're going to see precious metals likely pull down at least to a support zone here, or they could end up right back down through the middle of this noise here and come down to the 1580-ish level. Looking at silver, much of the same looking chart. It's rolling over. It's down almost 1% this morning, and it looks as though it could come back down somewhere around to the around 2750, which is through this consolidation, and of course we're sitting on top of these highs here. The gold miners ETF, they had a little bit of a pop, sold back down yesterday, and overall they're trying to break out. They do have some pretty good relative strength, but overall they really haven't got any traction quite yet, and I'm keeping my eye on them. Just looking at I'm just putting a resistance trend line on there. You can see we're still trading more or less under some key resistance, and if you go off a spike high, obviously we're trading above that, but generally I try not to go off a spike high. I try to go off at least touch at usually 2 candles or 2 wicks, usually at each peak or on average, and that's usually the best resistance trend line, and same for support trend lines, and that's where we're trading under. We've come up, reached that level, and now it's starting to head back down, so we may see it come back down and possibly form maybe a triple bottom here, at which point it could end up moving higher. But overall, still in the downtrend, precious metals, and they're really just trying to build a base before breaking out to the upside, I think. Looking at bonds, bonds chart is looking more and more bullish in my opinion. I'm starting to actually like it for possibly even getting long bonds. We're starting to see a nice falling wedge here. A falling wedge down into support is pretty usually a pretty good low risk setup, and the fact that it's just been under pressure and the waves are getting smaller and squeezing lower and lower, and we're actually starting to see volume diminish, meaning as it comes down to support there's fewer and fewer sellers, and that usually means sellers are running out of steam, and then buyers will start to step in, and once you see a reverse, all the people who are short and who have been selling it, they'll be looking to cover. So usually you get a kind of a tear your face off kind of sharp recovery rally. From there you get a pause, and then we could see it work its way back up to either form some type of possible head and shoulders pattern with this as the neckline down here, and it could end up heading lower, or it could be a triple top. I really don't know which way it's going to play out, but overall this pattern here is starting to show that we could have a 1 to 3 week pop in price, and that could be a 1 to 3 week drop in equities, which is more or less what the charts are looking for in the SP500 going forward. Looking at the SP500 chart, you can see here we're trading up into a resistance, came up, kind of tagged those levels. We're in a couple previous pivot highs. We are at trend line, upper trend line resistance here, this red line, and we're starting to look pretty toppy here. Overall, I do feel as though the market is getting ripe for a pullback, and that may start to happen. It may have started to happen 2 days ago, but overall we're still showing a little bit of strength in the market. Yesterday was the first day we really kind of started to see a little bit of selling. If we pull up the intraday chart, you can see here overall volume. If you look at the price action on average is working up, and we're seeing more or less volume diminish as we come into more or less resistance. This is pretty much kind of the flip side of what we're seeing in bonds, and they both work together. So technically we should see equities pull back sharply, and we'd see bonds actually rally. So as money comes out of the risk on assets, the stocks, we're going to see money go into the risk off, which are the bonds and the dollar, and they should rally. So that's kind of where we stand right now. Just looking across here, we've got a support trend line, and we're coming down to touch this level close this morning. Let me just clear the slate here. You can see if we just draw a quick support trend line, we've come down in pre-market this morning, touched that level, had a little bit of a bounce, and you could argue that there is a possible head and shoulders kind of forming here with a neckline, a rising neckline, which a rising neckline is more powerful than one that's sideways or angling down. It simply allows multiple levels of stops to be triggered. So you'll have these stops, and as price starts to break down, each time it breaks one of these support trend lines, these support levels, a wave of stops gets triggered. So you start to see it really kind of start to pick up speed and goes down to the downside, washes the market out, and from there you could end up seeing it start another bounce or rally. But overall it provides the rising neckline, you get multiple stops run, and it creates a nice downward thrust in price. Anyways, that's it for this morning, and I'll talk to you in a little bit. Bye bye.